Hi, good morning, everyone. First of all, thank you for joining this session on Market Outlook. Uh, on Markets Outlook and on ICICI Direct platform. So we're going to talk about the markets today. Markets at around 25,000 levels. Something which all investors, all of us have a question that has it run up too much. Where do we see markets heading? Which are the top stocks that one should look at, sectors one should invest in. So we're joined by Pankaj Pandey. Pankaj heads the research for ICICI Securities. So thank you, Pankaj. And so that's the first part of the session that we'll have for about 30 minutes. After that, we're going to talk about two subjects. One, we did a study on how retail investors have been investing on stock markets and ICICI Direct customers and amongst the profitable customers. So what did the profitable customers do right? Something which all of us as investors can learn in our journey. And then we spend large part on ICICI Direct platform. Many of your avid investors on the platform use the platform actively. So what are the tools? What are the features that you could use on the platform to help you invest better and trade better as well? So this would be the way we structure today's program. And there will be also Q&A after the around 12:30 we'll have Q&A. So whatever questions that you may have, please do feel free to put up on the chat. So without further, Pankaj, I invite you to talk about the market outlook as we go ahead.
Thank you, Saurav. Good morning, all. Welcome to this session. So when we talk about India, I think what we have seen is the India story is the strongest we have seen in over a long period of time. So I've been tracking markets for say about 20 odd years, and this is the strongest kind of a overall scenario which we have seen. And so India's growth story is largely anchored around some of the factors which are there on the slide. So for example, in terms of structural transformation, these are sort of well-known factors. So I'll not go into detail in each of these. So demographic is a well-known fact that, but just to highlight, so India has got 69% of the population in the age bracket of 15 to 64, and the median age is below 30. Similarly, from a macro stability perspective, RBI in 2016 adopted this inflation targeting framework, wherein they talked or what they've been sort of implementing is inflation to be in the range of 4% plus or 2 minus %. And largely say they have been achieving these numbers over a period of time. Similarly, debt to GDP, so while private debt to GDP is what I'm sort of referring to, which again talks about household debt and also the debt of corporates. That's about 50% compared to a global average of somewhere about 145. And what this clearly sort of tells you is that the ability of the corporates or the household to sort of spend is there. So consumption as a overall theme is here to stay because both corporates and the households are not that leveraged. So deglobalization is a trend we all know has sort of picked up post-COVID because China somewhere down the line was not really able to sort of live up to the expectation, and which is why we are seeing a bit of a rewiring of the supply chains which is going on. And last but not the least is decarbonization. I think there is a clear focus not only in India but globally to focus more on decarbonization. That is deriving energy from more clean sources. And good part for us is that we haven't really built that kind of a capacity at a mega scale. So we have a less of a legacy problem. Now, besides these, there's some measures which the government has taken and the benefits of which is already there. On taxes side, the corporate taxes have been reduced to 15%. That was for the new manufacturing units. Digitization is a big story which has sort of come up. And I think IBC has definitely changed the borrower behavior because gone are the days when a promoter used to take banks for a ride. I think there is a good amount of fear within promoters not to lose control of their company. And RERA is one of those big reforms because what China is experiencing today, I think we already had a bit of that problem earlier in the previous real estate cycle, and which is why RERA as of now has led to a lot more cleanup of a big sector like real estate. And what you see today in India is a very healthy GDP growth rate. I think last 4 years we are growing at 7%. Corporate earnings have been good. There's been manufacturing focus, and what we also clearly see is premiumization in the consumption. Now, to sort of play this India story, I'll talk about the sectoral themes for the next decade. But before I jump to that, I think we recently had corporate earning results. Now, when you look at the last quarter, which has gone by, one obvious concern is that this time around the sales growth was 9.5% for Nifty, and say profit growth was 5%. So obviously, this is a lower number kind of a growth, and usual complaint is that market काफी महंगा लगता है. But I think one needs to notice is that if you strip out the oil and gas space, because oil and gas typically is a commodity, and आपकी जो GRMs हैं, बाकी चीजें हैं, वो volatile रहती हैं, GRMs वगैरह थोड़े कम थे, तो which is why if you sort of exclude that aspect from the Nifty, the profit growth is about 13%. And if I sort of exclude Reliance, because Reliance also derives a good chunk of their earnings from there, so then overall earning growth is about 15%. And if you look at the next 2 years, what we are penciling is about 12% kind of a growth this year and about 16% kind of a growth a year after. And which is why next 1 year ka target jo hamara Nifty ka hai, that is 27,500. So this is about 10-12% kind of an upside from current levels, so which is not much. And I think one more thing is that when you sort of look at, there is a usual concern that the mid caps and small caps are sort of even more expensive than what you see for Nifty. Now, when you look at Nifty, what is happening also is that bigger P multiple kind of a stock, say for example, Trent, which is a stock in terms of P multiple, it trades at in more than 200 times. So that has sort of come in, and what is sort of going out is something like DVs or so from that perspective, more expensive stocks have come into the index, and which is why structurally also the P multiples have sort of gone up. Now coming to the mid cap and small cap, now if you look at Q1 FY25 earnings, so while the Nifty earning growth was 5%, the mid cap earnings was 12.5%. But when you look at the small cap as index, the overall growth was 21.5%. So, so it's not that the small caps have rallied without increase in earnings. So our sense is that you will get opportunities across caps, be it large caps, mid caps, and small caps, and earnings have, except for one segment of the market, I think, especially the oil and gas, the rest of the earnings looked okay to us. If I have to sort of dissect the same earnings from a sectoral perspective, that is what I was trying to highlight. The oil and gas as a sector on a YY basis witnessed about 32% kind of a decline in earnings. So that is one. Otherwise, most of the sectors have sort of done well from a earning perspective. Now, markets have rallied. We already know that markets have made a new high. Corporate profits are also at a high. But is this the top in terms of earning cycle? Now, see, the best time for the market was between 2003 to 2007. And that was the time when the capital expenditure as a cycle was doing very well. Real estate as a cycle was doing very well. Most of the economic cylinders were sort of firing. That point of time, the overall corporate profits as a percentage to GDP hit a high of 6.4%. Currently, we are under 5%. And if you sort of dissect between large caps, mid caps, and small caps, so for example, in case of large caps, we are at about 3.6% compared to the previous sizes of 4.4% of GDP. Similarly, for mid caps, it's 0.7%. So mid caps are largely, again, on similar lines. But when you sort of look at small caps, it's 0.7% compared to 1.3%. And while these earnings are at 12-year, 13-year highs, but compared to the previous best cycle, what we have seen, this is still sort of quite lower. And this is despite the fact that most of the corporates are in pretty good shape. The balance sheets are the best, what you have seen after a long period of time, including banks. Budget overall, I think not really going to spend so much time here, but some key takeaways. One, I think clearly, if you look at it's a non-populist budget, so there has been a focus on reduction in fiscal deficit for the past 2 consecutive years. Now we are aiming for 4.9% kind of a fiscal deficit number. And if you look at from the subsidy allocation perspective, the subsidy allocation as a percentage to GDP has really declined from 1.9% to 1.2%. That is what is proposed in the budget. And this is done despite the fact that the capex intensity, especially on the overall broader capex, has been maintained. Now, while a lot of benefits are talked about, what I would probably want to highlight is one, we are going to see a decent amount of interest savings because what happens that currently our GDP is 300 lakh crores and 5 years down the line, it will be about 600 lakh crores. At this point in time, we pay about 6.3% kind of an interest rate, and debt to GDP is somewhere about 57%. And if it was to sort of come down to 50%, broadly, you could easily get a saving of 4 to 5 lakh crore. That is the kind of fiscal bandwidth the government is creating. And now whether that gets spent into some other capex or some other area, we don't know. But government is definitely looking to create more fiscal space. And when you sort of bring down your debt to GDP, there is a potential for credit rating upgrade. And what it also does is that a low interest rate environment, which again is beneficial from a multiple perspective and also from an economic perspective, because a lot of business become viable at lower interest rates. Now, we all know that the government has been pushing the overall manufacturing leg or giving all the necessary conditions or ecosystem is being created to sort of push manufacturing. So obviously you had a PLI scheme, then the government is looking to sort of reduce dependency on imports. Then I think China Plus One also is something which is going to benefit, and I will highlight one sector there. And then we are looking to sort of do FTAs with number of countries where it is beneficial for both the countries. So in that way, I think what we are clearly aiming is a total exports of about $1 trillion. Now, this is the sort of overall pattern of households and the kind of incomes they carry. So out of the overall, say 31 million households, which were 31 crore households, which were there in 2022. Since the population is increasing, so we'll have closer to 36 crore households. Now, good part is that when you see that the top end of the people where people are earning more than 30 lakh, I think that number is going to literally sort of double to about 3.5 crores. And that is where the maximum leg of the premiumization is going to be driven. And similarly, when you look at the bottom of the pyramid, what is also happening is that people who are earning less than a lakh, I think that number is going to sort of shrink significantly from 12% to say 6% of the overall household. So I think that way also both the leg or both the pockets of the economy are expected to sort of do well. So you'll see more people doing well at the lower end of the strata, and on the premium or the premium consumption overall is going to sort of inch up. Now, in terms of if you have to play the India story, the theme for the next decade is again sectors, especially the capex beneficiaries. So right from capital goods, infrastructure, cement, steel. These are the sectors which are definitely going to benefit. Then there are some structural beneficiaries. So I spoke about IBC, which is benefiting the entire BFSI space. RERA is definitely helping real estate as a sector. And we all know that there is an energy transition going on globally, not only in India, and which because of which two sectors, one is power and the other one is auto, which is going to sort of benefit. Now, government capex is a percentage to GDP is at a lifetime high level, and 50% of the capex is going on the road and railways, which means that you're looking to sort of bring down your logistic cost, which is 14% of the overall average. And that will become the core for driving the overall manufacturing leg of the economy. So manufacturing contributes about 17% of the overall GDP, and which is where the maximum job creation is going to happen. And if the manufacturing of the leg of the economy sort of takes shape, then I think 7 to 8% kind of a GDP growth could become the norm. Now, when you look at the capex cycle, one, obviously, government has been doing the heavy lifting, especially the central government, and which is why if you look at the overall spend in FY25 was FY24 was 9.5 lakh crores. Now, the private sector capex is also sort of started to pick up. So you are seeing about 26 lakh crore kind of a capex with equal split between the corporates and or the listed corporates and the center, and then the balance is contributed by state. But if you look at and go back historically, say FY10, while the government at that point of time used to spend about a lakh crore, the private sector capex used to be 4x of that. And in fact, in FY09, this number used to be 5x of those numbers. And with the corporate balance sheets being in far more better shape, our sense is that the overall private sector capex has a lot more leg room to sort of drive the capex. And which is why we feel that while the government is going to drive the capex, that the private sector has the potential to sort of drive the capex further. And which is why I feel that capex as a theme is here to stay for a longer period of time. On the railways, railway is one of the most efficient modes of transportation, unlike roads. So one point of time, we used to have higher share of freight contributing or being carried by railways. Now we are going to sort of recoup that. So in terms of by FY30, the overall perspective is to take the share of freight or Indian Railways to carry freight to the tune of about 45%. This is now about 26 odd percent. But for that, a good amount of capex is required in wagons, coaches, and locomotives infrastructure. So I think budget allocation in terms of road and railways has not been a sort of a disappointment. So I think these are the two sectors which will continue to sort of garner a good amount of interest. On the roads, so while we have already built 1.5 lakh kind of kilometers of roads, but next step is to sort of increase this further by another, say, 41,000 odd kilometers. So we are going to eventually take our road network to about 1,87,000 odd. Now, the other perspective is that we are going to build about 12,000 odd or 15,000 odd kilometers of high-speed corridors where the average speed is going to be about 85 kilometers per hour, which is what the norm, what you see in most of the global evolved or developed countries. So from that perspective, the next leg of the growth in road is largely going to come from more high-speed corridors, which the government is planning. And these corridors are going to be within the nearby vicinity of most of the big major cities. So road is another segment which will continue to get attention from the government. Now, cement is a core sector that should benefit. So if you look at this sector is getting consolidated. Top 5 players are expected to sort of control about 60% of the capacity. While this sector has not done well from a price performance perspective, but if the other perspective is that if your big companies are looking to sort of buy more smaller players, then naturally the prices are not going to be higher because you would want to buy a set at a cheaper price and not an expensive price. So our sense is that once this M&A in this segment is done, then the pricing scenario will get better, and the kind of underperformance what you see in the cement stocks could be a thing of past. Now, steel is another sector which is bearing the brunt of the kind of slowdown what we are seeing, because the last 6, 7 odd months we are seeing a lot of stimulus measure being announced by China, but now none of the measures have really sort of have done anything to lift the industry or the overall economic outlook, and which is why this dumping from the China still sort of continues, and which is why you see the steel prices are at a sort of a 3-year low. Now, our take is that till the time this sort of continues, I think this sector may not really do great from a performance perspective. But this sector is quite important because if we have to sort of build more infrastructure, steel is definitely required. And our sense is that we are looking to double the capacity. That will require a capex of nearly 10 to 11 lakh crores. And we are already seeing top 5 players, their capex is nearly twice the normal what we've seen in the past 2, 3 years. So somewhere down the line, the government will have to intervene, which is what some of the Western world countries have started to do, and probably stop this dumping, which is going to sort of which is coming into India. And from that perspective, whenever that happens, I think that is when the fortunes of the sector will sort of get revived. So this is another sector which we feel has far more legs to sort of do it. One obvious complaint with defense sector is that is the story sort of over? But our sense is that this is also a sector which is sort of got structural legs. Last 2 years or more than 2 years, we've seen the acceptance of necessity given to about 6.2 lakh crore kind of a project. And our sense is that overall defense production is going to grow at 19% CAGR because one, you are going to procure more domestically, even if the overall allocation is going to grow at 9 odd percent. So this sector is going to sort of deliver high-teen kind of a growth. So while this most of the stocks have done very well, the PSU stocks are trading at 45, 50 multiple. But our sense is that see, a lot of sectors are going to witness correction. Some bit of a sector rotation is already going on. But this is not to sort of say that the story for the defense is over. So our sense is that whenever these acceptance of necessities are taken, it takes about 2 years or slightly more than that for these orders, for this to sort of get converted to orders. So from that perspective, I think we are bullish on the defense. But yes, from a sector rotation perspective, it is possible that these stocks may not really do well in a shorter time frame. Now, banking, I spoke about. Banking was one of the few sectors which was in trouble because if you look at the period between, say, FY 15 to, say, 20 or 19, that was the time when nothing happened. The earnings from positive had gone to negative. It impacted credit growth. The overall NPAs were quite high. The ROAs had become negative. Now, from there on, we've seen a very steady revival. So now 16% kind of a credit growth is what we've seen. We have seen NPAs sort of coming down. ROAs have improved. And profitability, so industry made a loss of say 20,000 odd crores in FY18. Now we are sitting at a profit of about 3 lakh crores. So you see a dramatic turnaround, and a good part is thanks to the IBC, which has been implemented. And banking is again a very important sector from an economic perspective because banking needs to be in a good shape for the entire capex or any economies to sort of do well. Real estate is another big cycle which is sort of shaping up very well. So this is despite the fact that if you look at last 2 years, since the RBI is high rate by 250 bips, your loan rates are higher by 200 bips. And at this point in time, the industry is sitting on one of the lowest inventories. I mean, inventory used to be about nearly 55 months in say calendar year 2020. This has sort of come down to about 15 odd months, and which is why you have seen that prices in a lot of the key markets like Bengaluru, Hyderabad, Mumbai, the prices started to sort of rise because there's hardly inventory left in the system. Power is another sector which is going to be a theme not only for a decade, but I think even longer than that, because structurally we are talking of energy independence. And I think there is going to be a sufficient focus on the renewable energy. Renewable energy is expected to be taken from say 172 gigawatts to 500 gigawatts, and this number will keep on sort of increasing. And this will require a massive capex of 25 to 30 lakh crores, and is extremely important from the perspective that from an energy security perspective. Now, one key constituent of that is the green hydrogen, and our sense is that overall we could be chasing about 10 million tons of green hydrogen, and that would mean the massive capex of about 14 lakh crores. Now, if you look at the recent Reliance AGM, which happened on Friday, what they're clearly highlighting is that so they are expecting things overall for them the size to sort of double in the next 3-4 years. But what they're clearly saying is that over a period of time, they expect a similar EBITDA from the new vertical compared to the overall previous chemical to chemical vertical what they have got, or oil to chemical vertical what they've got. And mind you, Reliance, for example, I'm just giving an example, is doing a capex of nearly 75,000 odd crores to sort of address this kind of a segment. And it is one of the big structural positives also, because we spend nearly about 10-11 lakh crores on buying crude oil. And if somewhere down the line, if you could sort of produce hydrogen at a competitive price, I think this is going to be the significant or the most structural positive aspect of the economy. Now, premiumization, overall auto is doing very well, especially the premium segment. Also within, if you look at the mass segment, one thing is very clear, the average ASPs have literally doubled from 7.65 to 11.5, largely because people are buying SUVs. So SUVs are now about 63% of the overall share. And this is here to sort of stay. So while volume growth is going to be in single digits, but the premiumization as a leg is definitely going to be there. And luxury car is still 1% of the overall sales. So from that perspective, this is something within the consumption which is looking very good. Now, hospitals and hotels are sort of a consumption which is sort of taking shape very well. I'm just trying to highlight hospitals. Last 4 years, if you look at this sector, has grown at 15% CAGR, and largely driven by a good amount of pricing. You don't need to add bed more. And overall, if you look at, we are adding about 40% more capacity. So I think this is one sector which is looking like better than FMCG kind of a sector, because what happens that once you sort of put up a hospital, after 3-4 years down the line, this becomes the hospital matures and the ROCs there improve. And I think overall medical tourism is also one of the factors which is going to help then as and when the penetration of insurance increases. I think that is also going to help this sector a lot. And when I spoke about China Plus One, so just to sort of highlight is that within pharma, CRAMS is one business model which gets followed. So overall, if you look at US is expected to sort of implement a Biosecure Act, and it proposes very stringent conditions for US companies in terms of sourcing from Chinese players. And this is definitely going to open new avenues for Indian companies. Because besides China or besides US, India has got the largest US FDA approved plants. And I think overall our sense is that this move is going to be a significant positive, because this is not just about resourcing, but also the fact that there is a possible concern in the US that China might steal the IP for the biotech drug, which because CRAM players actually help the innovators in their drug discovery and overall production process. So obviously there is a theft of IP, which some of these US or the US government carries. Beside that, there is also fear that they might sort of steal the genetic information of Americans. So that is also sort of playing in their mind, and which is why I feel that CRAMS as a segment is there to sort of do very well going forward and possibly accelerate beyond FY30. Most of the companies have maintained their capex, and despite the fact that post-COVID, we have seen this segment sort of struggling. But this is one segment which is expected to be a key beneficiary of China Plus One. Now, when you look at Indian market, so we are already the best performing market across globally. This is as on August 28th. And we have delivered about 30% kind of return, and most of the segments have not done so well. One thing which is coming out clearly is that the retail investors' participation has been rising, has been doing very well. If you sort of exclude NFO or include NFOs, the overall inflows is pretty significant, and they are a good counterforce to the FI flows what we have seen. And which is why if you look at this year, we have seen a maximum correction of 5%. So I think domestic savings are definitely helping the market and curbing the volatility what we've historically seen when the FI inflow used to happen or outflow used to happen. Now, I'm not talking about number of risks which are there in the market, but all I'm trying to say is that somewhere down the line, these risks lead to market correction. And except for big events like, say, 2008 when the Lehman crisis happened, or 2020 when the COVID struck, large caps have a tendency to correct 10 to 15% every year for some rhyme or reason. And similarly for mid caps, the correction intent is or extent of correction is slightly higher at 15-25%, and small caps naturally will correct more. So one is so all the investors should be mentally prepared for these kind of corrections in the market. These are pretty normal and will happen almost every year. So I don't think that should bother. I think what remains to be seen is, or what people should focus more upon is that when you get these corrections, do you have are you sort of mentally prepared to sort of put more money in the market, or do you have the capability to digest that kind of a correction or a decline in your portfolio? Now, if I have to sort of look at next 8-10 years, we are expected to be a $7 trillion GDP kind of a economy, a 7-8% kind of a growth. So which means that with an inflation of 4%, typically our nominal GDP growth rate is going to be 11-12%. And 12 to 15% kind of a earning CAGR in equities is something should not be a big deal. And since we already have a young force, so overall our sense is that we are going to be a big supplier of the or big contributor to the global workforce. And so sort of to sum up, I think 2003 to 2007 was one of the best period for the market. That was the time when the economy did very well. Markets did phenomenally well. And I think we see similarities between then and now, because that point of time, capital expenditure as an engine was doing very well. The real estate as a sector was doing very well. We are seeing something similar this time also. Not to say that we are going to see a move of, say, 5x kind of a move in Nifty, or 9x or 10x kind of a move in mid cap and small caps. But I think this is a structural transformation of the economy which is sort of going on. And you will get periods of correction. But overall, I think sense is that we are moving towards a very durable kind of a growth rate, and with lesser volatility. So from that perspective, I think that is the only change we are seeing, and which is clearly, part of it is reflected in the richness of the multiples what across caps we see. That's all I have to say. Thank you so much. I think over to Saurav for his.
Thank you. Thank you, Pankaj. First of all, Pankaj, I just, on behalf of the audience, I just want to take one question, and I may take that in Hindi, is key. So I'm saying long-term view, we are all, you've shared the sectors that we should invest in, but कौन से stocks हैं? अगर आप, if you could name us, let's say, a few stocks in large caps for our investors for long-term, few mid-cap stocks, जो कि investors SIP कर सकते हैं, portfolio बना सकते हैं, वो कौन से आप stocks बोलना चाहेंगे?
So, Saurav, Now coming to stocks, so I'll directly come to the point. I love stocks. So in large caps, so big ones like say Reliance, SBI, L&T, NTPC, Hindalco looks very good to me. These are the recommendations or suggestions I will give in large caps. Now coming to mid caps, we all know that real estate has done well. So something like say Kajaria looks very good to us. Technology has started to do well. So Sonata Software and Cyient is what I would suggest. Then infra spending is going to be there. So NCC besides L&T is looking good to us. And Mahindra and Mahindra Finance, largely because we are expected to see a decline in interest rates. So NBFCs typically should benefit. Bearing companies are a good capital expenditure play. So bearing is required everywhere. So that is another suggestion I would give. So both SKF and Timken look attractive to me. Now coming to small caps, so for example, JK Cement, I already highlighted is witnessing a bit of a downtrend in terms of prices. Stocks are not doing so well, but that is the time to sort of pick up stocks. Then I spoke about CRAM, so something like Piramal Pharma should do well. Similarly, Somani Ceramic or Greenply, because when these real estate or houses get delivered, there will be a demand for ply, there will be a demand for tiles. So from that perspective, some of the home building categories are expected to sort of do well. I think I've given decent number of large caps, mid caps, small caps.
Sure. Sure. Thank you, Pankaj. And I think people can put the questions on the chat also. I just want to add one thing to what Pankaj said is कि Pankaj has spoken about a long-term decadal opportunity. तो ये stocks भी हैं वो आप accumulate कीजिए. I mean, instead of going all in at once, these are not stocks which are for the next 15 days to 1 month. These would be structural stories wherein you can build a good portfolio. So we come to the other part of the presentation. Wherein people are investing. Pankaj ne bola ki long term. Pankaj spoke about the stocks and sectors that one should look at. But markets are apart from long term has definitely created significant wealth. You look at people and in fact investors who have been holding on to markets. Holding on to stocks, L&T. You look at so many banks or across category of stocks. Definitely have created wealth. But the problem with markets has been that it's the volatility. It's volatility which kind of takes, makes everyone, all of us nervous. Ki abhi kya kare? There was election uncertainty. It was a genuine uncertainty amongst investors. Ki abhi, if the shift changes in politics, will it? And a lot of people then sold stocks. So ये जो uncertainty होता है, how do we deal with it? So I'm saying one is getting the right stocks, and second is getting being invested over a period of time. So what we did actually was a study of ICICI Direct retail investors, right, who've been investing in markets, and उन्होंने क्या करा जहाँ पे they've been successful, they have made decent money or decent returns in markets. So that's the segment that you just want to kind of look at. And this is just one slide. I just want to kind of share, and I could just refer, let's say, an example of Tata Motors. If all of us remember, Tata Motors today is obviously 1,100 rupees or 1,100 rupees. But Tata Motors 5 years, 6 years back, if you remember, go back, the stock was 650. They did a preference at 550. The stock moved to 350, 200, 170. The point is just think about investors who are buying a stock. They obviously think that the stock will do well, it'll go up. And, when the stock falls, there also investors are not kind of so negative. It's okay. But if the stock continues to fall and, kind of for 2-3 years, if the stock doesn't do well, investors really get frustrated and they kind of then exit and they think that, the day I'm going to get my cost price in this stock, I'm going to, actually exit this stock, right? And this typically happens for everything. But what we looked at our data, and if you look at it here, it's about 12 is 12 months, 24 is 24 months, 30 is 30 months. And what we try to look at is कि investors जिन्होंने long term के लिए stocks को hold करा है, retail investors, again these are not institutional investors, जिन्होंने अच्छे stocks को long term hold करा है, you can actually see markets में they've actually created good returns in market. We've actually इसमें भी थोड़ा सा हमने एक्सप्लेन करा इस डेटा को, and what we did was we looked at Nifty top 100 companies in India. In simple language, Nifty 50, Nifty 100 companies, and companies outside Nifty 500 companies. तो हमने वो स्प्लिट करा कि अगर आपने इन्वेस्टर्स ने अच्छी कंपनी में पैसा लगाया है, वो अगर 1-2 साल अच्छा नहीं भी, द स्टॉक्स हैव नॉट डन वेल, ओवर द पीरियड ऑफ टाइम, अगर आप ये ब्लू लाइन देखें, दोज इन्वेस्टर्स, एंड दिस एक्चुअली इन्वेस्टर्स रिटर्न, दे मेड मनी. इट इज द मिड कैप स्टॉक्स, अगर आप स्मॉल कैप जहां आप देखें कि इन्वेस्टर्स ने जिसे होल्ड करा है, और अगर आप देखें 2-3 साल बाद भी, इफ यू लुक एट द रिटर्न्स हैव नॉट बीन प्रीटी गुड. There is few more slides, but I don't want to see. What I'm trying to say is that in mid cap there is a difference. One is that mid caps may do well, but there are two kind of people who invest in mid caps. One is आपको बहुत ज्यादा conviction है स्टॉक के बारे में, आपने बहुत learning करी है, तो if there is, I'm saying during bad times people have conviction to hold. But people who just hear say, मतलब सुन के इन्वेस्ट करते हैं कि ये स्टॉक बहुत अच्छा है, 20 में लगा दो, ये डबल हो जाएगा. When the stock don't, or there are phases in the stock does not do well, investors kind of lose patience, and then they kind of sell stocks. And अगर आप ये data देखें, it reflects the fact that in mid cap investing, लोगों ने, या small cap, because these are outside 500 companies in India, have not kind of have not kind of got a lot of returns. The point essentially is just that कि आप conviction build करें stock में and hold it for long term. Another thing, which we've seen in our customer data is a lot of customers कुछ single stock में बहुत ज्यादा पैसा लगा देते हैं. उनको लगता है कि ये stock है जो मेरा fortune change कर देगा, मैं इसमें मतलब significant wealth create करता हूँ, ये double हो जाएगा, triple हो जाएगा, and I kind of make a lot of money. Also what happens is it creates a lot of pressure, because वो stock आप इतना पैसा लगा दिया है कि once the stock falls down, you kind of then don't have the holding power. So what we again saw with data was investors जिन्होंने, अगर आप देखें तो average of 10 stocks, so around 5-7% का allocation किया है single stock में. You look at the returns is around 17%, in large cap companies, right? Even if you've done mid cap investing, those returns have also been fine. So but however, investors who have been very, very focused, एक दो stock लिया है, large cap में still they've been better, but so but otherwise if you look at it, the returns have not been so good. So the learning out of this slide is, again, investing is a lot of it to do with behavior. अगर हम अपना asset allocation ठीक करें, single stock में asset allocation ठीक करके 5-7% करके, so we as investors हम pressure नहीं create कर रहे हैं अपने आप पे कि एक single stock, if that doesn't do well, our entire portfolio drags. So that is one learning. Again, we've seen of investors who have done well in the markets. This is all, again, as I said, real investors data. Another thing, which is in fact very favorite, is averaging, right? Because हम जब stock खरीदते हैं, we don't buy it at once. People kind of average it. And obviously markets fall. Pankaj spoke about it. There are so many times when Nifty not for 8-10% falls आते हैं, but in stocks those falls. If you can look at, let's say, in Hindustan Aeronautics, the stock is down 8-10%. You look at Mazgaon, the Mazgaon would be down 10-15%. So what we looked at is at what price do you average? Right. Again, in averaging, there are two philosophies. One is a general market fall, and second is with a specific company. Then you may like to really evaluate, and maybe you may not like to invest in that stock at all. But generally, हमने देखा है कि जो investors ने ना strategically invest करा है. Just example ले रहा हूँ मैं ITC का. ITC 440-450 में काफी दिन चल रहा था. फिर आपने 450 पे लिया, फिर 440 आया, आपने और ले लिया. 430 आया, आपने और ले लिया. फिर 410 आता है, 400 आता है, तो आपने इतना पैसे लगा दिए कि now अब the people may not even have the money to invest more. So then people then they think मैं wait करता हूँ. So what we've seen is investors who have had a systematic approach towards investing, 5-10% का एक gap रखा है, या 10% का I'm saying 5%, 10% आप देखें तो investors have actually had better returns. So I'm saying being systematic in building portfolio, in the price, when you're deploying your money, has also kind of been a factor of creating returns in markets. Again, I'm just trying to say that for long-term investors, the stress is not much. आप अच्छे stock लो, आप इसको hold करो, over the 5-10 years. In our lifetime, in our data, we see people making money. It is the, when it comes the volatility and the fall, yeah, वहाँ पे, people kind of get a little, I would say wrong-footed. But having said it, this is just one thing we wanted to show you on the data of ICICI direct customers. Now I'm going to kind of move to the 3-in-1 account, and I'm going to go to the platform. And I just, I just want to take 1 minute, and just showcase this particular slide to you, which is that अगर आप ICICI direct account देखेंगे, so the thing about ICICI direct account is that कि the money always remains in our customer savings account. अगर आपने कल एक money control का article पढ़ा होगा, I mean there was a regulatory comment that market में brokers are holding 2 lakh crores of customers cash. Now 2 lakh crores of customer cash in broker's account mean broker earning on customer funds. In ICICI Direct, the entire ecosystem with ICICI bank accounts has been कि customer का पैसा never moves to broker account. It always remain in customer's own savings account, and उनको उनका interest मिलता है, and which is not small, right? I mean, up to 3.5% का ब्याज मिलता है on the savings account. So that's a significant money that investors get. जो कि otherwise, in the traditional model, brokers keep the customers' funds and they earn on the customer's money. So ICICI Direct with the ICICI savings account, the money always remains in your bank account, even if it's allocated to trade. So that's just one thing I wanted to say on this slide. And I'm going to talk about EATM as well. So let me just move to the slide also and show you certain things. One is जब आप प्लेटफॉर्म पे लॉग इन कर रहे हैं, सो आई थिंक मेनी ऑफ यू वुड बी अवेयर, ट्रेडिशनली आप लॉग इन करते हैं थ्रू अ पासवर्ड एंड देन देयर इज एन ओटीपी व्हिच वी गेट, राइट? देयर इज अनदर सिस्टम दैट वी डेवलप्ड इज जहां पे कि आप जब वेबसाइट लॉग इन कर रहे हैं तो यूजर आईडी, पासवर्ड, ओटीपी ये सब करने की जरूरत नहीं है. मतलब मेनी टाइम्स हम फैमिली अकाउंट्स किसी का मैनेज करते हैं तो फिर ओटीपी के लिए फोन करना पड़ता है. यहाँ पे मैं सिंपल आप आईसीआईसीआई डायरेक्ट का ऐप पे जा सकते हैं. वहां पे एक मेन्यू सेक्शन पे एक क्यूआर कोड दिखता है, आप उस क्यूआर को स्कैन कीजिए और आप लॉगिन हो जाएंगे. आपको यूजर आईडी, पासवर्ड वगैरह की कोई जरूरत नहीं होगी. सो दैट्स आई एम जस्ट सेइंग द लॉगिन बिकम्स वेरी वेरी सिंपल व्हेन यू डू दैट. The second is, and I'm just kind of highlighting some of the things which are important for investors, is EATM. अगर आप देखें तो let's say Thursday or let's say Friday, yesterday being a Friday, आज के दिन अगर आपने स्टॉक बेचा तो जो टिपिकल मार्केट सेटलमेंट साइकिल इन इंडिया इज T+1, राइट? मतलब अगर आपने फ्राइडे को बेचा है, सैटरडे संडे इज ऑफ, मंडे को शाम को ब्रोकर के पास पैसा आता है, टिपिकली आप उसको ट्यूसडे को आपके बैंक अकाउंट में पैसा आएगा. I think many of ICICI Direct customers would know, or people who are new to ICICI Direct, अगर आप EATM यूज करके स्टॉक को बेचते हैं तो that money, up to 75% to crore rupees comes to the savings account within 5 minutes. So suppose आपने कल 9:40 को स्टॉक बेचा मंडे को, या लेट्स से फ्राइडे को कल अगर आपने स्टॉक बेचा होता तो आपके अकाउंट पे पैसा कल ही 5 मिनट के अंदर आ जाता है. एंड दैट्स so no waiting for 2-3 days to get cash. And I'm saying we are all in financial fields. तो आप देखिए कि 3 दिन का ब्याज मिलता है. 3 दिन का ब्याज is not small. It's almost 3 basis points. Which additionally comes because the cash is coming instantly to the customer's account. तो up to 1 crore rupees comes immediately. वो पैसे को आप सेविंग्स अकाउंट से निकाल सकते हैं और वो पैसे को चाहो तो आप उससे दूसरे स्टॉक्स भी खरीद सकते हो. तो दोनों both the features are available. And ये बहुत ही सिंपल है. आप जब भी सेल कर रहे हो कोई भी स्टॉक को तो आपने सिर्फ यहाँ पे जाके EATM को दबाना है एंड आपने जो भी शेयर बेचे आप क्वांटिटी डाल दो और आपके पैसे जो हैं आपके सेविंग्स अकाउंट पे तुरंत आ जाएंगे. So that's the second thing which is I want to kind of highlight. I also will let me also tell you a couple of things which investors use, and let me take a case of ITC as a stock and which is good till trigger order, which means कि सपोज आज के दिन आईटीसी 500 रुपए पे चल रहा है, काफी लोगों ने उसे 400 पे खरीदा है, काफी लोगों ने उसे 350 में खरीदा हुआ है. तो व्हाट डू वी इन्वेस्टर्स वांट? हम चाहते हैं कि भाई अगर ये अभी सपोज 500 रुपए चल रहा है, जिस दिन आईटीसी 600 रुपए आ जाए, नेक्स्ट 1 महीने 3 महीने बाद, नेक्स्ट 6 महीने साल भर में, तो मेरा सिस्टम प्रॉफिट बुक कर दे. हम लोग रोज सिस्टम में नहीं बैठते हैं. लॉट ऑफ इन्वेस्टर्स आर नॉट इन फ्रंट ऑफ द सिस्टम एवरी डे एंड ट्रैक प्राइसेस एंड वो ऊपर जाता है स्टॉक एंड देन वी मिस इट. यहाँ पे वी हैव अ फैसिलिटी ऑफ गुड टिल कैंसिल ऑर्डर, व्हिच मींस यू कुड प्लेस अ टारगेट प्राइस फॉर द नेक्स्ट 1 year. Whenever that comes, our systems will ensure कि 600 rupees will come. Let's say if I put 600 rupees here, and the day 600 rupees comes, the system will ensure my profit is booked. So I don't have to track prices every single day when I'm on ICICI Direct. Some of the investors would also want कि मेरा एक stop loss भी डाल दो साथ में, कि भाई अगर मैंने 500 रुपए में खरीदा है तो मेरे को ज्यादा रिस्क नहीं चाहिए, बिकॉज मार्केट्स कैन गो रॉन्ग, समथिंग कुछ हो गया, आई डोंट वांट टू टेक टू मच ऑफ रिस्क ऑन माय पोर्टफोलियो. तो आप मेरा टारगेट भी डाल दो और आप मेरा स्टॉप लॉस भी डाल दो. तो मैं 525 का टारगेट डालता हूँ, 475 का आई एम सेइंग व्हाटएवर यू डिफाइन, you can put, and then you can sit and you don't have to worry कि beyond a point you will not lose a lot of money. And if the stock comes to this price of 525 in 15 days, 1 month, whenever, system will ensure that your profit is booked in your account. So that's a capability that we built on good till cancel order, which is called GTT. All that you have to do is select GTT on the website when you're trading. I'll just give you another use case of GTT, which is very popular, when people are actually buying stocks, right? So let's say I've got ITC, right? And the stock is trading at 500 rupees. Now I bought this stock at, let's say, 300 rupees. Now, what is the fear? In fact, what is the fear of everybody, almost all investors at markets at 25,000 levels? कि बाजार बहुत ऊपर चला गया है, अभी वो करेक्शन आएगा, whatever profits I have, वो मेरा profit ना चला जाए. I'm saying it could be, any stock actually. I'm just taking an example of this particular stock at this point of time. So what investors want is that if the stock is trading at 500, I want it to go to 550, 575, that's fine. But I don't want to lose my profit, which means that I bought it at 200 and I want to at least get 250 rupees profit or 270, let's say 300 rupees profit in the stock. So what you can do is we can set up a trigger price at 475, let's say, right? Which means that if the stock moves from 501 to 525, 530, the stock, you continue to ride the upside. If for some reason there is a correction in the market, the stock corrects 5-10%, you don't want to lose a lot, because you bought the stock at a much lower price. You want to protect your profit of, let's say, $250. तो आप यहाँ पे ट्रिगर प्राइस डाल दीजिए 475 का. तो जब भी आएगा आपका, अगर 475 सपोज कुछ मार्केट फॉल होता है, तो आपका 475 में स्टॉक सेल हो जाएगा. एटलीस्ट जो अगर आपने 300 पे खरीदा है तो 175 रुपए का प्रॉफिट आपके अकाउंट में आ जाएगा. So there are three purposes. One is, in simple terms, अगर आपके पास स्टॉक्स हैं तो लोग बेच देते हैं स्टॉक को, लगता है कि काफी रिटर्न हो गया, 30-40% बढ़ गया है और अभी कितना ऊपर जाएगा पता नहीं, बट ये नीचे आ गया तो मेरा नुकसान हो जाएगा. तो इंस्टेड ऑफ सेलिंग द स्टॉक, आप उसको थोड़े नीचे प्राइस में आप उसका जीडीटी प्राइस डाल सकते हैं, सो दैट कि ऊपर गया तो अपसाइड राइड कीजिए और नीचे गया तो एनीवेज आपने कुछ तो प्रॉफिट बुक लॉक किया हुआ है स्टॉक के अंदर. सो एज अ लॉकिंग योर प्रॉफिट्स यू कुड यूज GTT on ICICI Direct. Right. I'm just kind of moving a little, I'll move to a couple of things in the interest of time also. Is MTF. Many people would be aware, but still I would like to kind of brief you. Let's say this elections, obviously elections is now a time of past, but even अगर आप budget देखें, budget के दिन भी market actually, there was almost a 400 points fall in market. काफी सारे mid cap, small cap अच्छे stocks, there was a good price that they had come in. Now, when there is a good opportunity that we see in the markets, one is that obviously we may like to play the full news out, or second is a lot of times people don't sit on cash, right? अभी मैं उस समय कैश में नहीं बैठा हूँ और मार्केट में एक अच्छा फॉल दिख रहा है, एंड just because I'm not sitting on cash, मैं स्टॉक को बाय नहीं कर पा रहा हूँ. So with MTF, अगर आपको लग रहा है कि भाई एक अच्छा प्राइस आज स्टॉक में दिख रहा है, आपके कैश you may be invested somewhere else, या आपको लग रहा है 10-15 दिन में मेरा कैश आ जाएगा, तो आप क्या कर सकते हो कि MTF से स्टॉक को बाय कर सकते हो. आपको पूरा कैश देने की जरूरत नहीं है. सो सपोज अगर मैं यहाँ पे जाऊं, अगर मेरे को 100 शेयर ITC के खरीदने हैं, तो अगर आप देखें तो मुझे 100 शेयर ऑफ ITC इज 50,000 रुपीज, बट मुझे एक्चुअली MTF में सिर्फ 17,000 रुपए देने की जरूरत है. सो आई एम जस्ट पेइंग ऑलमोस्ट 1/3 द अमाउंट बाइंग द स्टॉक, एंड जो बैलेंस 33,000 रुपीज है, आई कैन पे इन 15 days टाइम, आई कैन पे इन 1 month's टाइम, और अगर मेरा स्टॉक 4-5% भाग गया तो मैं उसको प्रॉफिट बुक करके छोड़ दूंगा. सो आई एम सेइंग दैट कैपेबिलिटी टुडे एग्जिस्ट. इनफैक्ट ये जो 17,000 रुपए का जो मार्जिन भी देना है ना, ये भी आप अपने एग्जिस्टिंग शेयर्स को दे सकते हो. तो इनफैक्ट इट कैन बिकम कंप्लीटली कैशलेस. MTF में बस मैं आई जस्ट वांट टू टेल 2 things. वन इज, अगर आप इसे अगर आपने पूरे पैसे नहीं दिए हैं और आपकी so basically which means that ICICI Securities has then funded the position, there is the interest which is charged. The interest, the lowest that we offer is among 9.69%. It is amongst the lowest rate in the market, that kind of exists. So at good rates, you can look at the stock. अगर आपको लग रहा है कोई अपॉर्चुनिटी दिख रही है मार्केट में, and you could use that. लास्ट थिंग ऑन MTF इज, इसमें डिविडेंड भी जो आता है वो भी पूरा का पूरा क्लाइंट को आता है. तो अगर आप Q1 वगैरह रिजल्ट्स में देखेंगे तो काफी डिविडेंड्स कंपनीज देती हैं, तो पूरा का पूरा डिविडेंड भी आपके अकाउंट में क्रिएट हो जाएगा. तो MTF is something which again is popular when investors are trading, right? So I also want kind of run through couple of things. Is when we are investing, जैसे पंकज ने बताया कि let's say he spoke about steel, or he spoke about cement, and he spoke about few stocks in sectors for long term. तो एज इन्वेस्टर्स मुझे अपना एक लॉन्ग टर्म पोर्टफोलियो बनाना है, या मुझे कोई थीमेटिक कोई भी पोर्टफोलियो बनाना है, So what we can do is on ICICI Direct, let's say, I could create a basket of stocks. मैं वेटेज वगैरह मेरे अपने पूरे हिसाब से दे सकता हूँ. I could name this stock, let's say, long term investing करके, and I could define कि ये क्यों मैं कर रहा हूँ. Let's say I'm just taking reason, and we can then start an SIP in these stocks also. So अगर हमें लग रहा है कि ये कुछ अच्छे स्टॉक्स है जो कि हमें लॉन्ग टर्म के लिए पोर्टफोलियो में क्रिएट करना है, इतना टाइमिंग वगैरह नहीं कर सकते मार्केट में आके, तो आप इसका SIP स्टार्ट कर दीजिए, इन द बास्केट दैट यू एक्चुअली वांट टू क्रिएट. और इट कुड बी, लेट्स से, अ थीम कि आपको केमिकल स्टॉक अच्छे लग रहे हैं, या लेट्स से आपको फार्मा अच्छा लग रहा है, या लेट्स से टेक्नोलॉजी स्टॉक्स अच्छे भाग रहे हैं, तो आपको टेक्नोलॉजी के 4-5 स्टॉक लेने हैं, कोफोर्ज लेना है, टेक महिंद्रा लेना है, इन्फोसिस लेना है, तो आप उसका एक बास्केट बना लो, और वो बास्केट की अलग से then you can even track how that basket is moving, right? So अगर आप देखें यहाँ पे कि मैंने कुछ पोर्टफोलियोज जो बनाए थे, तो आप देख सकते हो कि how the portfolio has उसमें क्या रिटर्न्स रहा है वर्सेस मार्केट उसके अंदर क्या रिटर्न्स रहा है. तो ये पूरा एक इकोसिस्टम अवेलेबल है जो कि आप अपना शांति से अपनी इन्वेस्टमेंट स्ट्रक्चर करके सिस्टम में डाल सकते हैं. So that's one thing which I wanted to kind of talk about on one click. Another thing which I would also urge and want all of you to look at is gladiator stocks. Now these are stocks जो ICICI Direct के research analyst recommend करते हैं. So Pankaj की entire team, wherein ICICI we are looking at stocks one from two criteria. One is from a long term criteria, and second is from a technical momentum कि stock के अंदर अच्छा pattern बन रहा है क्या, अच्छा volume generate हो रहा है क्या. So I'm saying that's a stock idea that's almost for 3 to 6 months. I just want to tell you, for the last 5 years, our track record has been around 82% strike rate, which means 8 out of 10 stocks have made money for investors. Obviously, 2 have not made money. So our recommendation is that आप देखें ग्लैडिएटर स्टॉक, जैसे कि अगर हमने नैटको देखें, आप नैटको हमने दिया था 1425 पे, अभी नैटको भी ट्रेडिंग एट 1500. I'm saying you can look at entire history of stock that we have given to investors. आप हिस्टोरिकल परफॉर्मेंस भी देख लीजिए, investors have kind of made money. तो मेरा सिंपल इसमें ग्लैडिएटर में my last comment is कि if you are giving 7-8 stocks in a month, our advice would be कि आप सारे के 7 से 8 stocks ले लीजिए and have equal allocation, whatever amount that you're investing. Let's say it would be 50,000 rupees, it could be lakh rupees, I'm saying whatever amount that you've decided, but have an equal allocation. It is our historical track record, again, as I'm saying, past future we would not know, but historically over the last 5 years we've made 82% of the stocks that we've recommended to our investors made money for investors. So that's one thing I wanted to kind of talk about Gladiator. You can get these Gladiator stocks on WhatsApp also. So you could go on ICICI Direct and subscribe for investment ideas here, and you could get these research note on your WhatsApp as an app notification. So all that's something which is possible for you on ICICI Direct. Additionally, since we are on WhatsApp, you can even set a WhatsApp alert for getting dividends on your account, right? So you could kind of, whenever there is a corporate action, whenever there is a bonus, whenever there is a dividend, you could get a WhatsApp alert, and that alert just comes to you saying that out of 5,000 shares you hold, you got 25,000 rupees of dividend. So all that ecosystem is available to you. There are no charges, no additional charges for whatever I'm articulating and showing to you at this point of time. The other thing in the interest of time, also moving a little fast, is on family portfolio, right? I mean, a lot of investors are not managing their own portfolio. They're managing the entire family portfolio, which means that I'm managing my account, I'm managing my father's account, I'm managing my mom's account. And today, when I look at the markets, I want to see how, let's say the entire portfolio is moving, right? So I could, then add my family members' accounts here, right? So, I mean, there is on the family, you just have to go and give them a request. They have to accept the request, because, without they accepting the request, the accounts cannot be mapped. So up to 10 family members is what we could in a single account track. And, you could even look at stock wise then that, how, and at a family level, if you're holding Infosys, and how, how much is the allocation goes Infosys. So stock level information, everything asset level, is what you can get on ICICI Direct. So entire family investment that you're doing, you could track it at a single place on the ICICI Direct platform. I just, I mean, also moving, and talking about tax harvesting. A lot of people, spoke about capital gains. In fact, I could see it in the chat here that how much capital gains am I making? And, on ICICI Direct, if you see here, we've actually shown you, I'll go it again. You go to portfolio, you go to tax loss harvesting. You will see short term, how much is your realized profit? Long term, how much is it? What is the tax liability? Where is the unrealized loss, stock level? Then if there is opportunity, that the system will also give it to you in front, upfront here, right? And it considers FIFO, which means it's first in, first out. You could have done thousand, let's say 1,000 lines, another 200 lines, you sold 50 lines. So all that is done at per the income tax rules of FIFO. The grandfathering prices are calculated on real-time basis. You get the entire capital gains liability. I mean, now that, many of you us would also be aware that Reliance actually is given a 1:1 bonus, so I mean, people are holding the stock for last 3 months. The stock price from 3,000 will come to 1,500. So if you sell the stock, there is a notional loss that you create, and then that offsets some other tax, that you have on the account. So the entire tax, knowing, I mean, during 31st July or during February, you would want to know what is your capital gains requirement and where could you optimize that. So all that information is available on ICICI Direct. So that's, something which I want to kind of show. I'll also move to a little bit on trading, because a lot of people are trading also on ICICI Direct. And when you're trading, you want to kind of maximize, and have tools which helps you trade better in markets. First thing I want to kind of talk about is shares as margin, right? So shares as margin is something wherein what you can do is, you could use your existing shares, and on your existing shares, create limits, right? So you don't have to bring cash when you're trading. So, you could, you have ideal shares. On the ideal shares, you create limits. So generally what happens is, brokers would ask for 50% cash, and 50% cash has to move to the broker pool account. And then basically the money has moved from my savings account to the broker pool account. I'm losing, 5-6% yield on that cash, which is going to broker's pool account. So on ICICI Direct, one, you don't have to bring compulsory cash. You can use your shares. The cash remains in your trading account. You continue to earn interest on that. You use your shares, and with shares for intraday or overnight, you don't even pay interest on FNO. With our prime plan, there is no 0% interest that you pay. So if you have, let's say 50 lakh rupees, you create a limit of, let's say 40 lakh rupees, you can use that as margin. You can write options on that or do an intraday trade, and there is no interest that, you get charged on that, right? So, that's on shares as margin on ICICI Direct. So I just, we'll talk about some things, which traders do, and traders who are a little more, so there are two types of traders. One are option buyers, and the second are option sellers. You would like to kind of maximize the risk, minimize the risk also when you're trading, right? So, see, when you're trading in markets, there is high element of risk, right? And when as traders, the first most important part for us is how do we minimize risk when we're trading. There are various strategies people deploy. There are short straddles. I've just taken an example of a condor. You could create these are predefined strategies here on ICICI Direct. All that you're using is to select those strategies, around 25 strategies that we have. You can see the margins that going to get charged to you here. You can see your maximum loss on the trade. You can see your maximum profit. And if you want to trade this stock, you just click here and you trade. So the entire trading ecosystem kind of becomes simpler, faster when you're trading on ICICI Direct. Another thing, which we've launched is on ICICI Direct, and generally in the market, let's say if I've taken one side position, or I have taken, let's say I've bought Reliance and I bought TCS. Let's say these two stocks I've done. I have to track individually their portfolio, right? TCS profit will be individual, Reliance profit will be individual. Similarly, in options, let's say market 25,250. Let's say if you've taken option price. I could trade these options individually, or as a combination. For me, what I've done is I've done a short straddle, right, which means 25,250 call I have sold, 25,250 put I have sold, and I now at a combination of this trade I am making a profit loss that the maximum loss in this trade I would want is 1,000 rupees, and maximum profit I would want is 1,000 rupees. And additionally, we made a feature wherein you can even lock your profits. So you don't have to do single leg options. You're doing multi-leg options and then locking your profits on on ICICI Direct. So that's something, which we've done. I just, will take, minute more and then kind of talk a little bit on order slicing, because a lot of customers, both on the cash side and, option side, slice orders. So slicing orders is typically what? Slicing orders is, let's say, on the cash side, if I have to say Sun TV, right? And if I want to buy Sun TV, let's say 50,000 shares. Now, I would not want to buy Sun TV at 50,000 shares in the market because, or in limit price, because the moment I put a 50,000 quantity order, everybody sees in the order book that, there is a big trade which has come. So people will then, modify the trade, put up, in fact, there are algos which sniff the order book and then kind of modify. The other is, I could just slice my orders. Let's me take an example of a Nifty contract. Again, let's say if I want to, let me take an example of 25,500 call, right? I want to trade this options. This option is trading at 39 rupees. So I don't want to do 500 quantity. Let's say I want to do 5,000 quantity, right? So, and I could then slice it at 500 levels. And I could say, instead of sending an order of 5,000, you send an order of 500 quantity and I could define every 1 second. And, so system will slice my orders. I could add price also, at which price do I want to, send my orders to the market. So that capability also exists on the market on ICICI Direct, and even simple capabilities. If I have to just, say, let's say, I'll go on stock side also. Let's say I want to buy a very simple stock called ITC, right? I want to buy ITC on ICICI Direct. I want to buy, let's say, 200 shares, but, I want to buy 40 shares, let's say, every time the stock falls 3 rupees. So I could define my, conditions on ICICI Direct. And then, the moment the stock keeps on falling by 3 rupees, the system will keep on buying 40 rupees for you. So manually is what we are doing here. It can be done automation on the, automated on the system as well. And, just the last thing was, our smart orders is on scalping, because I read a lot of YouTube comments on how do we kind of trade better. So you go to execution algos, you go to scalping. Let me just take an example of Nifty, and this can be done for stocks as well as Nifty, which is, let's say, this call. I am trading, let's say, 100 shares or 100. And what I'm doing is I'm saying every 3 rupees the stock goes down by 25 each for me. And every time it goes up 4 rupees, sell for me. So let's say it's trading at 155. Or, let's say, let me take a simple whole number, which is, it goes down by 5 rupees, which is to 150, it'll buy another 25. It goes down to 145, it'll buy another 120, buy another 25 shares. And if it moves up by 6 rupees, it'll automatically build profit maybe. So entire ecosystem could be made automated, on ICICI Direct, and even on the brokerage, you could opt for a brokerage plan here on my brokerage plan, wherein if you're placing trades on the derivative side using algos, the brokerage will be 7 rupees per order. So even if you're placing, let's say, 1,000 shares and you're slicing in 500 each, so it'll be 7 rupees plus 7 rupees is sell. So all that you have to do is you have to map the scheme here. So there are a lot of capabilities. My submission is that if you could just spend 15-20 minutes on the platform, you will get to see a kind of a rich experience both on mobile, web. I'm just taking a last thing, let's say even a watch list. A lot of people do charting and they do a lot of exhaustive analysis on charts. They would want to see multiple, charts on a single screen. And let's say save a particular indicator, let's say an RSI with a moving average, all that's there today on ICICI Direct when you're trading. So, so in terms of, in terms of value of money, which is in terms of the money which remains in your trading account. I'm just taking an example here. Let's say in this particular account, if there are, let's say, rupees 10 lakhs allocated in this trading account, the customer is the one, even if the money is not there in bank, right? Even if you see here, the money is not in bank, the money is in trading, but the customer benefits out of the funds in the, which they have, right? And you could go to brokerage plan section and choose the lowest brokerage plans which are available, right? Both on cash segment, both on FNO segment. On FNO side, we've moved to 20 rupees per order. So, with high value plan, you could even do that. So, on the pricing side, there are a lot of pricing, offering which are there for you to experience. So that's all that I want to kind of, talk about. And we could then move to a little bit on Q&A. So I just stop sharing my screen and we take a little bit of questions and answers. Okay, so Pankaj, I just give this to you first. Is what is whether the estimated Q1 GDP will have a positive impact on markets in this coming week? Do you feel that? So Pankaj, you're on mute.
Yeah, I'm audible now. Yeah. So if you look at the GDP number which has come up, it's 6.7%. I think the overall expectation was 6.8%, so slightly lower. And this is largely to do with the fact that, from a YY or quarter-on-quarter number is down because, I mean, in an election quarter, typically the overall economic activity sort of slows down. So I don't think this number is going to have any ramification on the market performance. So I think Fed outlook and Fed the quantum of rate cuts what they do, I think will be a bigger factor. So I think September 9 is that is when it is due. So 25 bips is largely baked in. If it is more than that, we need to see. And now you are on mute, Saurav.
Sorry, I'm saying that another question that I see is what is the impact that you see on US elections? It's just November now, we're starting September. So do you think that can cause some volatility in the markets?
Absolutely, because if you look at both the candidates have taken different diametrically opposite positions. So while Trump is saying that I'm going to reduce the corporate tax rate, say from 21% to 15%, Harris madam is saying that she's going to take it from 21 to 28 odd percent, and it will have ramification in the US market because when you are sort of lowering or increasing tax rate, you need to earn revenue somewhere. So which means that probably Trump will be quite harsh on China in terms of raising tariff, whereas probably she could be spending more on a lot of populist childcare and other activities. So it will have implications for the market. More than Fed rate cut, I think US elections will definitely create some volatility.
Right.
So we need to wait and watch for it.
Right. So basically, as investors, I mean, one of the things which scares investors is ki, something goes wrong and then I mean they lose money in markets. So you're saying that's an event for people to watch out for. The thing I want to ask is on defense. I mean, obviously defense has done very well, but over the last 1 month, if you see defense stocks have not done well. In fact, it's down, I mean, almost 10, 15, 20%. So where do you think, I mean, is the defense overhyped? Or now are the valuations so I mean baked in? Maybe it may take over I mean next 3 to 6 months, maybe really I mean maybe like this, or do you think it'll kind of move up?
No, so it's wrong to expect that one sector will keep on doing very well, right? So defense has already done well. Most of the stocks have more than doubled over a period of time. Last 1 year also they have done very well. And we are seeing about 20-25% kind of a correction in most of the stocks. I already highlighted in my presentation that there is a structural story behind. But yes, because of sector rotation, don't expect a near-term price performance. But having said that, real estate as a sector, as a theme is what we prefer or we like, or I would suggest. And stocks, otherwise, if you look at HAL, Astra Microwave or Bharat Electronics, I think these are the stocks which look good to us. But don't
Thanks.
expect a near-term performance.
Thanks. PSUs also, because Pankaj, again, I mean, a lot of people are invested in PSUs. There is last 1 month. In fact, though markets have moved up, but the stocks in the portfolio doesn't seem hitting all-time highs. So do you think that's another sector to worry about immediately for the immediate few weeks?
So that also is one segment which is done well, but there are some pockets which have not done so great from a price performance perspective. So for example, SBI or PSU banks in general haven't done much in terms of price performance. So the likes of say State Bank of India, Bank of Baroda look attractive to us. Or the specialist or specialized NBFCs like IREDA look very attractive. I already spoke about 25 to 30 lakh crore kind of a spending opportunity. Then this PSU capex, Engineers India does play a decent role. So that is another. So NTPC, Engineers India, SBI, IREDA within PSUs look good.
Right. So let me just take one more question which has come on the platform, which is on how do you track XIRR on the stock portfolio? So I must tell you, it's we built this feature over last few weeks. It's available on our mobile app. So on the App Store, if you go, we have an ICICI Direct app, which is a stocks mutual fund. You see that. That's a new app. That's wherein if you click on the portfolio section, and on the top, you see the portfolio values. You have just click on it, you see the XRR. So on XRR, you are seeing two type of XRR. One is across your portfolio, right? I mean, whatever stocks that you have, if you have 15 stocks, I mean, how has the, XRR returns has been? As well as you can see individually as well, right? I mean, a stock moving from 50 to 90 looks almost 100% returns, but indeed for 5 years, it may just be, 18, 17%. So that XIRR facility is on the mobile. Please do download the new app that's there on that. Another thing which I see is on GTT order. I mean, GTT order, when is it going to be on mobile? So by September end, I think we should be there with GTT order on the mobile as well. Right now, it's there on the web platform. We will, as I said, by September, we should be there. Pankaj, a few questions I will just take for you as well, which is on tech stocks. Not done well. I mean, the last few weeks have been good for technology. You think it's kind of peaked out, or you think there is a rally just started?
So one is, see, I'm not too sure about the direction US is going to take because you have an election coming up and big corporate tax changes can happen. But yes, the commentary is slightly better. If you look at, see, recently we had HCL Tech Analyst Meet, then there was LTTS Meet. So what HCL Tech is clearly saying is a double-digit kind of a growth rate for the next 5 years. However, this near-term 1 year, you'll see a growth of 3 to 5%. But yes, worst is largely behind us. Incremental positive, we still don't know because see, AI is another theme which is taking shape. But that is still a sort of a concept. It is yet to sort of translate into orders. But if somebody can play a waiting game, because it's very difficult to sort of decipher the pace of improvement. So then I would sort of suggest stocks like, say, Tech Mahindra. You have Sonata Software, which is talking good in terms of AI contributing their overall revenues. Cyient, Birlasoft. So these are the companies I prefer in technology.
Sure. So I'll just take one more question, and I will also request everybody to please feel free to write to ICICI, helpdesk@icicidirect.com, and you can mention query as for the webinar. And I must, and we will reply to all the questions. So any question that you have, please write to helpdesk@icicidirect.com. And we will respond to every query that we will get. We completely track each of these queries on the help desk. Within 24 hours to 48 hours time, you will get all the responses. But let me just take one question on portfolio beta. So people are seeing portfolio beta on the website. So the question is, what is portfolio beta? So I just in simple terms, there are a lot of corporate action which happens on the account, right? I mean, there could be a merger, demerger, there could be bonus split. Bonus splits are factored in on the portfolio. I mean, obviously bonus doesn't reflect on day one, day zero. It reflects after 10-15 days when the company issues the fresh equity. So it takes around 15-20 days time. You may see a red on your portfolio, but that's like because the equity itself is not issued. However, there are certain times when demergers also happen. So that effect of all the mergers and demergers will be given. So you will not have to add any transaction on your portfolio manually. So portfolio beta is something which we are right now in testing phase. Over the next 2-3 months, we will make it live for our customers. So our portfolio, the portfolio is very well, all corporate actions are factored in. So that's the thing I wanted to take. But as I said, thank you for everyone for joining this call. Thank you, Pankaj. Our view, as Pankaj said, is, be invested in markets for long term. There would be short-term volatility which will, happen in markets. One need not get perturbed. I think that's the biggest, mistake, if I have to use the word, which investors do is we get worried about short-term volatility. I think there are smarter tools, ecosystem which we can do to override it. Which, I mean, and as simple as that could be starting an SIP in stocks, right? And so we don't have to worry about if the about markets. And also, not go all in, right? I mean, I think people should phase out the investments. So we believe, this is a secular. I think the title of the presentation which Pankaj made was secular story for India. The kind of retail inflows that we see, not just I'm saying, on mutual funds, on direct equity also. If I have to just share, just share a number. In India, around 10 years back, around 40 lakh people used to invest in stock markets. This year, this number will be around 4.5 crores. Right. I mean, but if you look at it, it's still 4-5% versus the kind of numbers that you see in developed markets. So there is opportunity, but volatility is a part of our life and part of investing. I think that part of the only has to get managed. So we will do all our efforts to kind of make the experience as seamless. So thank you so much, everyone, for joining. Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.